Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. Well, stocks are looking to recover this morning as the Federal Reserve's two-day policy meeting kicks off and as earnings season really heats up. The market is all but certain that the central bank will keep rates unchanged when it delivers its first decision of the year tomorrow afternoon. And it does come as earnings season picks up with those tech names on deck. Earlier this morning, we heard from NYSE-listed automaker General Motors, which delivered upbeat results, and its shares responding accordingly. That's because it exceeded profit and sales estimates and forecasts a strong year ahead. Let's take a look at what's on tap in today's show. Well, with the Fed in focus these next 48 hours, Eddie Gabor is going to join me in just a few moments to talk markets, including what to make of the technology space amid that earnings pickup and, of course, the news yesterday. Plus, Unilever's president sat down with my colleague Trinity Chavez to discuss the lead up to the Super Bowl. We will be watching the Chiefs and the Eagles duke it out, but brands with the best ads will also be a takeaway. And the CEO of a startup called Check joins in person to talk more about artificial intelligence and what makes its offering unique. Well, joining me now in studio, as promised, is Eddie Gabor. He's managing partner and co-founder at Key Advisors Group. Eddie, great to have you on the show, especially in person.
Thank you. It's great to be here.
And a lot to talk about when it comes to markets, certainly this week between that Fed decision, tech earnings, and more news out of the artificial intelligence space. How does the market look to you right now?
So DeepSeek threw a big curveball at us. You know, we had a webinar for our clients this past week and said it's going to be all about the Fed and the earnings and what these companies are going to say in regards to earnings during their call, because expectations are for growth to accelerate for a lot of these firms. And DeepSeek threw a wrench in that in regards to the big reaction. So right now, I would say the overall market actually looks really good, because yesterday, all the focus was on DeepSeek and NVIDIA losing 16, 17%, but 70% of the S&P was actually in the green yesterday. So that broadening out actually is very bullish from our perspective and healthy from a market standpoint. In regards, this is why we bought yesterday. We thought when we saw the DeepSeek news and saw a broad-based sell-off across the board, we picked at some financials and some small caps and things like that that didn't really relate to that headline event that caused that big sell-off in tech.
I think for some perspective as well, Eddie, to help clarify this for our viewers, we had seen NVIDIA rise, I think, more than 100% last year at the same time that the S&P was up a little bit more than 20%, right?
That's exactly right. And we own NVIDIA for our clients for full disclosure, and it's been a great stock. No one likes to see that big of a move in one day, but to your point, it's had massive growth. And this isn't the first time NVIDIA's had this type of move. Just in the last 24 months, we've seen this happen 2 to 3 times. And so patience and not overreacting generally wins in a scenario like that.
Let's pivot to the Fed decision because, of course, that meeting starts today. The decision will come tomorrow before we start hearing from some of these large technology companies after the close on Wednesday. What's your expectation from the Fed?
I think the Fed is going to come across as somewhat accommodative to those that want rate cuts, but they're not going to cut rates this meeting, and I don't think they should. I think they're going to be data dependent, and I think if Powell says that in his press conference is going to be data dependent and continues to talk about they believe that inflation is trending in their direction, it could give the market a nice pop. But the way he answers those questions are so scrutinized, and any indication of him not wanting to do any cuts this year will be very, very bearish short term for the market. We will get a sell-off. At the end of the day, I actually think it will be healthier if we don't need rate cuts, because that means the economy is doing really, really well.
I do want to ask about President Trump's comment to the World Economic Forum virtually last week that he wants to see lower interest rates. We know, obviously, the way that the Federal Reserve is set up, it is an independent body that sets the course for rates. How might that be at play tomorrow for our viewers to prepare for?
So actually, there's two, and when it comes to interest rates, to me, the most important thing is the 10-year bond. And from the time the Fed started cutting rates, the bond market actually went up. So interest rates actually went up when the Fed was cutting rates. So I think if they don't cut rates, that the bond market will be okay with that. And that's where I think the big disconnect is here. So if you want interest rates to come down, you need to keep policy tight. If not, interest rates are going to go higher.
Interesting. Now let's turn to those technology results, because I'm sure in the wake of the news yesterday, specifically toward artificial intelligence, that this will be something that these technology companies need to address in the coming days. Is that right?
It is. That's going to be the number one question that they're going to get, is how does DeepSeek impact future investments? And there's going to be winners and losers, again, if this DeepSeek technology is real and these companies are allowed to use it. Because if you think about it, if it's going to reduce the amount of money they have to invest, for some companies that's going to be good, but for companies like NVIDIA, that will be a bad thing. So there'll be winners and losers in this, but they're going to have to answer that question to satisfy Wall Street, or there'll be more selling in the AI names.
What is it about this Chinese competitor that could potentially be a threat to America?
Well, the thing of it is their privacy statement says that they are able to, that they collect your data and store your data, okay? And we just got a ban on TikTok because of it potentially being a threat. I can't imagine allowing all U.S. citizens to download this app from China where they can collect all of your data. To me, if you think TikTok is a threat, this also has to be a threat. The other thing too is I'm not so sure it passes a sniff test in regards to $5 or $6 million investment, and in 2 months they created something that is faster and more efficient than what we have spent hundreds and hundreds of millions of dollars and years on. So, I kind of take it with a grain of salt in regards to the source, because I would have to believe that they would have spent a lot more money on that. And the other question that we don't know is, how many NVIDIA chips did they actually use in developing this? And that's still, we don't really know. So right now, it's kind of a wait and see scenario.
Interesting. Now, when it comes to these technology names, just their bread and butter, what we expect on the top and the bottom lines, how does that business model for these companies, each one a little bit different, look to you?
So I think the AI names actually are going to have the biggest hurdle to beat, right? Like NVIDIA, when you look at a company like them, they have had such earnings growth and revenue acceleration. It's going to be hard to beat it. So we actually expect their revenue to decelerate. And then you look at names like Meta, they actually benefit in this environment where the investments in AI, as well as small business sentiment, has soared since the election, and they rely a lot on ads from small businesses. So we're really bullish on Meta. We own Meta, and we think they are a name that can thrive in this environment. And then there's going to be some losers in the tech space as well.
You mentioned financials earlier, and certainly they would benefit from more deals. They would benefit from market volatility. We've had many people come on the show, and market watchers in general say that this year could be more choppy, right? After 2 very strong years of the bull market. Can choppiness be a good thing?
It can be. It's the only thing is it's going to test people's nerves. I don't think just buy and hold a broad-based basket is going to work this year. We have said 2025 is going to be challenging and extremely volatile. And I do think there's going to be an air pocket because of the inflation problem that we have, that we may have to navigate a 15 to 20% correction in the broad market some point in time this year. We've told clients we think that'll be an event that starts to materialize in the second quarter, but look at what happened in the video. You wake up one day, you think everything's fine, the next day it's down 17%. That can and probably will happen again at some point in time this year. So it's going to be a challenging market, but I think at the end of the year it'll be good.
Quickly, Eddie, what would be behind that, a 20% drop?
Inflation accelerating because of the growth accelerating and the 10-year bond going to 5%. I think that's a real scenario that's going to happen this year.
All right, Eddie Gabor, managing partner and co-founder at Key Advisors Group, joining me in studio. Eddie, thank you.
Thank you.
All right, well, stay with us because up next, the Kansas City Chiefs aren't the only ones returning to the Super Bowl. Stay tuned to see what NYSE-listed Unilever has planned for the big game.
So Brightwave is an investment research platform that uses artificial intelligence to help asset managers understand more about the markets than is humanly possible.
And what would you say that makes you unique, though, from others who are currently on the market?
A number of things. So we have an incredible engineering team. So for myself, I established and led the language model engineering practice at Databricks. Created the first language model to demonstrate that open source technologies could exhibit the kinds of behaviors we've come to expect from ChatGPT. My co-founder is the former CTO of a federally regulated derivatives exchange and clearinghouse. It is.
Yeah, it's really amazing.
And his first deep learning patent was filed in 2018. We've got engineers from Meta and Instagram, award-winning research engineers, commercial team from UBS and McKinsey and Goldman Sachs. It's a stacked bench,
Yes.
and it has allowed us to execute on very, very difficult technical problems. If you think about the number of factors that are relevant to an investment decision, it exceeds the limits of a person's ability to keep it in mind simultaneously. And we see an opportunity with language models to create a technology that allows a person to connect the dots across millions of documents and see a story that nobody else has noticed in order to identify a mispriced asset.
And you decided to come to Money 2020 this year because you had a major announcement about your Series A funding.
That's right.
Yeah.
We have announced a $15 million Series A, preempted by Decibel Partners, one of our seed stage investors, and including participation from Omers Ventures. We're extremely excited about this. This brings our total funding in the past 17 months to $21 million. We've quadrupled our revenue since our Series Seed announcement in June or July, I forget exactly when. And it's happened quickly. We've seen vigorous traction, brisk demand from across financial services.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Now, while the Kansas City Chiefs and Philadelphia Eagles will deliver the action on the field during Super Bowl 59 on February 9, a slew of companies, including NYSE-listed Unilever, is going to look to star off the field. I want to bring in my colleague, Trinity Chavez, with more. Trinity, good morning.
Hey, Kristen, good morning. And that's right. While all eyes are going to be on the big game, on the Kansas City Chiefs and Philadelphia Eagles battling it out during Super Bowl 59, the action off the field is also just as fierce. Unilever is once again stepping into the spotlight with an iconic brand like Hellmann's and Dove, making big bets on the big game. But what makes these $7 million ad spots worth it? And how do they turn those moments into lasting connections with customers? Well, I caught up with Unilever's CEO, Harish Patel, to find out.
Well, firstly, we want our brands to be unmissable, right? These two brands are our two biggest brands. They are, a majority of households in the US, and what a wonderful way to showcase for the big game.
And talk to me about, with big game ads, they cost roughly around $7 million for a 30-second spot. That's a big chunk of change. So why do you think that businesses continue to do this, and do you think that it's worth it?
Look, firstly, there's so much more to the big game around just the ad. So the ad gives us huge amounts of reach. It's the biggest sporting event in the US, so both brands get huge visibility in the way they show up, and it's unmissable. But it's more than that. We also do social, creator, influencing right across the digital spectrum. And then you think about our big partners like Walmart, Amazon, etc. We have huge displays to showcase our innovation for the rest of the year. So it is very much a 12-month investment, a brand equity investment.
And I believe that you call those the always-on campaigns. Is that correct? Yeah. Talk to me more about this concept and the innovation behind it.
The always-on campaign is, let's use sports marketing as an example. It's always on because we start with Super Bowl, then we get into college basketball, then we get into college football. We also then sponsored last year the Women's World Cup. So we have a philosophy around sports that's always on, as in we're always communicating, we're always in the moment, we're in the cultural moment, which allows us to connect with communities, consumers, but also then showcase with our retail partners our innovation that we're launching in that year, which is a multi-year innovation platform.
What other major sport events is Unilever involved in, and why are they a good fit for your brand?
Well, Super Bowl is one. We obviously we have a FIFA partnership, so for soccer, professional soccer. We also do college. And they're great fits because what sports buys is real-time engagement for the brand, right? It's live. It also gives us a digital platform, but it also allows us to activate with some of our biggest customers around the event, promoting either our core business or our innovation. So it's a real-time marketing strategy.
But how do you go about choosing those cultural moments to invest in?
Cultural moments are the ones where it fits with the brand. So Super Bowl is a really good example, or the big game, where the majority of Americans tune in. They're all actually fascinated with the ads. And then it allows us to build on that moment in the way we take that right through to social influencers, creators. We create content always on. And then you see that all the way through our .com sites or with our in-store partners.
And with the rapid development of technology, AI, we're seeing all of these digital media platforms constantly evolving. How do you keep up with that ever-changing landscape?
I think it's a great question. Look, technology is the big breakthrough. So we believe that we want to be the best at social. We call it culture at scale. That's what we want to be at. And we're investing in technology that allows us to create, how do we create 10,000 worth of content for one activation? How do we use AI to ensure that we target audiences in the right way where they shop? So technology will be the enabler for the new dawn of marketing.
And of course, Super Bowl 59 is going to be on February 9th, 2025 at Caesars Superdome in New Orleans. Now, I do want to talk to Kristen Scholler again about, as we're gearing up for the Super Bowl, Kristen, this is something that we're going to be following here on the show, but I do want to point out that did you know that in 2022, Super Bowl ads hit a record-breaking number of $578 million that was spent just for a 30-second spot that averaged to be around $6.5 million.
It is impressive indeed, Trinity. And I think that the Super Bowl really is a family affair, right? Because whether you like football, Taylor Swift, or ads and marketing, there's something in it for everyone, not to mention the snacks. I'm especially interested to see how viewership turns out this year with that trifecta combined.
No, absolutely. And you know, over 100 million people from around the country tune in just to watch the Super Bowl. Ads are a big part of that. So this is a major platform for advertisers, which is why we're seeing so many businesses and consumers just tune in to see who's going to be advertising during the Super Bowl show. But also halftime is a major point of the Super Bowl as well. Kendrick Lamar is going to be making headlines this year. And you know, tickets for this are starting at around $6,600 on average. So a lot to look out for, Kristen.
A lot to look out for. A pretty penny indeed. Going to be streamed on several different locations. I'm going to be watching from home, Trinity. What are your plans?
I think I'm going to be watching from home also too, Kristen. So again, we're going to be covering it on the show, but right now we're going to switch gears a little bit because up next, we're going to be speaking to the CEO of Check. They're going to be discussing how this platform is elevating platforms by making processors simpler for businesses and the role that AI is playing in it. So stick around.
So Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done consumer testing and consumer surveys, as well as how we've seen our members utilizing our clubs, we've recognized the opportunity to kind of shift our mix a bit and have a greater complement of strength in our clubs.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, when it comes to payroll, it can really be a headache. But Check is working to change the game, embedding payroll into businesses, making it simpler and unlocking new revenue streams. So to talk more about this and how Check is shaping the future of work, I am joined now by Andrew Brown. He is the CEO of Check. Andrew, welcome to the show this morning.
Thanks for having me on, Trinity.
So I said it a little bit in the lead-in, but for our viewers who might not know, why don't you give a little bit of a broader overview of this platform?
Yeah, absolutely. So Check is the leading provider of embedded payroll. What that means is we work with software platforms to help them provide payroll services to the small and medium-sized businesses that they work with. So think an example is helpful. Think of a coffee shop. They need a point of sale system. They need to manage their staff. How do they do that? They do it with a modern software platform, and that platform works with Check to help those folks get paid.
Yeah, give us some more real-life examples as to how companies are utilizing your platform to really streamline the whole payroll workflow.
Yeah, exactly. So I'll give an example. House Call Pro is a customer of ours. If you're a plumber or an electrician, a real world business like that, you're going to use House Call Pro to manage your whole business, schedule your appointments, get there, accept your payments, and you're also going to get paid via their platform that's all built on top of Check. So that's where we come in. We're that layer in the background. Think of us as, that infrastructure, that plumbing layer, much like a bank or another financial service provider that really helps those software platforms step forward and provide the service to the small business.
But what would you say sets your concept apart from other people or other companies rather, that are currently on the market? What makes your strategy so unique?
Yeah. Do you like dealing with taxes?
No.
No.
Who does?
No one does.
Who does?
No one has ever said yes to that question, right? And I think that's really it. Think of a small business owner. You have so many different things you have to worry about. Taxes and payroll are the absolute last thing that you want to deal with. And so really what we're able to do is we're able to help these platforms build incredibly workflow specific software for the customers that they serve. So you're not going and just signing up for some generic service that doesn't really work for your business. This is something that makes it where in just a few clicks you can be done with running payroll and back to running your business. So I like to think of myself as the payroll entrepreneur that really our goal is to help people not think about payroll.
And you founded Check, so talk to me more about the innovation and concept behind developing this. What was your motivation behind starting this company?
Yeah, our mission at Check is to make paying people simple.
Yeah.
What that means for us is all about how do we help people not have to think about all of that complexity. I'm the type of person, if you're in line at a drive-through and you have to wait, extra couple of minutes, it drives me crazy. I'm like, why can't we be more efficient with this? And that was really the motivation. It was, why do we have to spend time calling the IRS on these government websites? We should be able to make it a lot easier.
Oh, I know. And wasting time is one of my biggest pet peeves because it's your most valuable currency, right? You don't get that time back. But I do want to ask you about how you go about serving your tens of thousands of customers around the country, around the world. How do you cater to those customer needs, and how do you meet those demands in an evolving landscape?
Yeah, it's really the beautiful part of our business model because Check is a tool and it's not something that goes direct to the end customer. So we support hundreds of thousands of people every month, tens of thousands of businesses, but we do that via our partners. So we have about 70 partners, and those folks build new modern custom platforms all on top of us. So they do that part of making it work really, whether it's for the plumbers or the coffee shop or agriculture, whatever the industry might be, and Check's able to be the rails in the background.
But there's so many different challenges, right, that could arise as you cater to so many different industries. Talk to me about what the biggest pain points that you're noticing right now in the broader business landscape and how you're addressing those challenges.
Yeah, the biggest thing that we see is for folks who work hourly jobs, you work in the real world, your pay is complicated. You have to deal with minimum wage laws. You have to deal with things like tips, and it's been a big thing recently coming out of the election. Will tips be taxed? Will they not? How will that work? All of this changing regulation is just a continuous challenge, and so it's by really internalizing that complexity, building it directly into the platform, making it where as a business owner you just don't have to think about it and don't have to worry about it. That's the key. I think people working white collar jobs often don't realize how complicated pay is for a lot of people out there. And that's what we do. We really make it easier for the rest of the country.
But I do want to talk to you more about the workflow landscape as it's constantly shifting, constantly evolving. How do you stay ahead of the curve? How do you remain innovative and to meet those customer needs and demands as it's constantly shifting?
Yeah, I'm a technologist and engineer by background, so I think you have to constantly be looking at what's next. Right now, that's AI.
Yeah.
DeepSeek is everywhere. It's all everyone everyone wants to talk about. And I think for us, it's really about saying, look, technology is changing now faster than it ever has before. I think I'm more optimistic about the future than I ever have been before. So let's lean into that. Let's use AI in our business. Let's give these tools to not only the biggest companies, but to the smallest companies too.
Talk to me more about that. How are you going about implementing this first-in-class technology and Gen AI into your business strategy to help level up, scale up your business?
Yeah, again, it's all about providing those tools, not just to the biggest businesses, but to the smallest ones too. So that means whether it's a chatbot so that the the customer is able to come in and not have to, they can't afford to pay for an accountant or someone to give them other advice, but give them basic information about how they should deal with their taxes and their payroll and things like that, or whether it's internally to be more efficient. It's really, I think we're still just at the very beginning of this shift where increasingly traditional SaaS software is getting, frankly, I think it's getting commoditized, and it's going to go more the way of agents and folks using that type of a paradigm.
And now briefly, what are you excited most about the rest of the year and the near term?
Yeah, I think what's so exciting is this whole embedded payroll concept that Czech has pioneered is really just getting going. We have 70 partners, all of whom have built these amazing products and services on top of us. And so I just really can't wait for the innovation that they're going to take, including leveraging Gen AI to small businesses all across the country.
Andrew, it's always a pleasure speaking with you. Thank you for joining us on the show today. It was a pleasure.
Thanks for having me.
Again, Andrew Brown, CEO of Czech. Now don't go anywhere. We have the opening bell up next.
How has this partnership propelled Snowflake's growth and deepened its ties to the broader financial and technology communities?
Well, you know this. The New York Stock Exchange is the most storied stock exchange ever on the planet, and we're thrilled and honored to be on it. But there's also a very deep collaboration between the firms. It's at the level of us being the data platform for ICE and for the New York Stock Exchange, and being an important distribution mechanism for all of the amazing data that the NYSE wants to share with its customers and partners. We get a lot of great feedback about where Snowflake should evolve from Lynn and her team. And things like the tree lighting and the judging or the icing on the cake that demonstrate how closely the companies work with each other to partner, but just as importantly, create success for all of our giant customers. It's a deep partnership that I'm very, very grateful for. I tell people that AI is already magical because these language models can do things like understand fluid language, like the language you and I are speaking, and make sense of it, extract context from it, and do that effortlessly. We knew that how people are going to consume information was going to be changed forever. Just like, back when the first smartphones came, most people in the world kind of simultaneously realized that there was a before and an after, that everybody was going to have these amazing devices with them. I think we're going to think about AI the same way.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, in just a few moments, NYSE-listed company Kyndryl is going to ring the opening bell and officially kick off today's trading session. My colleague Trinity Chavez has more on the company. Trinity, what can you tell us?
Hey, Kristen, that's right. So today we have NYSE's Holdings, Kyndryl Holdings, Incorporated, ticker symbol KD. They are ringing the opening bell to celebrate the launch of the Kyndryl Institute. And to mark the occasion, the executive team is going to be on the bell podium, as well as the president of Kyndryl India. They will do the honors and officially kick off trading for the day. And for those who might not know, Kyndryl is the world's largest IT infrastructure services provider with over 80,000 employees worldwide, helping businesses modernize the technology systems that power the world every single day. So, Kristen, we're going to be seeing images of that bell podium in just a couple minutes as we get ready to open trade for the day. But what can we expect after Kyndryl rings the bell?
Trinity, that's exactly right. So markets in keen focus, certainly for our viewers, that this week, and that's because we have a whole host of data points between earnings, a Fed decision, and of course, the latest developments in the artificial intelligence space. But that is a pretty banner, a full packed podium, and let's take a listen to the opening bell. All right, we are officially open for trade. A lot of cheers. You can hear them behind me here at the stock exchange. And we do see some fractional gains, certainly a recovery for stocks. The S&P not far from a record high after what was some selling yesterday on artificial intelligence. But very much in focus this week, of course, earnings and the Fed. So joining me now with more is Jim Thorne. He's the Chief Market Strategist at Wellington Altus. Jim, thank you so much for joining.
Thanks for having me today.
What do you make of this market?
Steady as she goes, we're going higher. And ignore the noise, fundamentals are good. We've got a vibe shift happening with Mr. Trump in. It's small government and pro-private sector, pro-innovation. We need to grow out of it, productivity growth. So ignore the noise and use the volatility to buy high-quality stocks.
What are some high-quality stocks on your radar?
Well, I think, NVIDIA, the AI trade is still full steam ahead. I like banks. I like utilities. I think high-quality U.S. stocks is where to go.
Interesting. Now, of course, we had seen yesterday some selling due to the artificial intelligence scare with DeepSeek, a Chinese AI competitor, if you will. But my guest earlier was telling me that still yesterday, 70% roughly of the broader market was higher. So I'd like you to speak more about those fundamentals, the DeepSeek aside, that do show that this market, by and large, can continue rising.
Yes, I think the market is starting to recognize the fact that Mr. Trump's policies are more moderate than previously expected, which we should have a period of time where we get a broadening breadth in the market, and that's what we're seeing right now. Mm-hmm. And what I would just suggest to you is that with the Fed coming this week, the big risk is not 2025, it's 2026, and the fact that the Fed right now is making a real-time policy mistake by not continuing to cut rates. So we should be okay this year, but next year is where the big question is. Why
is that a mistake, and what could that portend for 2026?
Well, the rate cuts that should happen this week will not be felt until 27. The drugs of the Biden administration of the irresponsible fiscal policy is going to start to wear off. So when you look at the data objectively, the economic growth we're experiencing is a mirage caused by 125% debt to GDP. That's going away. If you look at the labor data, it's weaker than expected. If you look at inflation, when you take out shelter, it's at target. So the Fed should be at neutral, or what we call R star, which is 275. They're too tight. And that is the big mistake. As the drugs wear off in terms of the fiscal policy from last year, and we have an excessive tightness this year, the rates that we are dealing with this year were set 18 to 24 months ago. So the big risk is a hard landing in 2026. That's the concern.
Interesting. I do want to talk about technology names because 4 of the so-called Magnificent 7 will report earnings this week: Apple, Microsoft, Meta, and Tesla. How are these companies faring, and what does that mean for the broader market?
Well, I like all 4 of them, but the one that I really focus on is Tesla because of the DeepSeek controversy. What we're really talking about is the fact that we're moving from the infrastructure phase to the application phase. That's Tesla. That's Palantir. So I really like Tesla here, and I think it's being shall we say, ignored a little bit. The rest of them are world-class companies in secular growth areas, stable earnings, strong free cash flow, fantastic management teams, and they should be core positions in your portfolio.
How does crypto factor into your market outlook?
Well, I like crypto, and I think that Bitcoin is a solution to the deficit problem. It is an asset class, but I think, as Mr. Fink says, I think tokenization is the big theme that's coming. And what's very interesting is that the NYSE and NYSE are already involved in that with a couple of small companies. So I am very encouraged about tokenization and crypto. And what we get is we've delayed blockchain innovation for about 4 years because of the Biden administration. Now it's time to catch up. So I think it's a very interesting area.
Crypto 200,000 on Bitcoin year end. Are you in that camp?
Yes. Yeah, I think by the end of the 4 years, so let's go, end of Trump's term, S&P 14,000.
Wow.
And crypto is going to be north of $500,000, or Bitcoin will be north of $500,000.
That is a bullish call. So we're talking about a more than doubling of the S&P 500, and certainly for crypto, more than quadrupling.
Yes, and with what's happening with DeepSeek, what we've got is the arms race is on. Right? And Mr. Trump has said the U.S. is open for business. Mr. Bessent, who's the new Treasury Secretary, just got confirmed, is saying productivity growth is the way to go. Buckle up. The next 4 years is going to be wild.
All right, Jim Thorne, Chief Market Strategist at Wellington Altus. Jim, thank you so much for joining.
Thanks for having me.
Well, stay with us because up next, Hello Alice says it empowers over 1.5 million small business owners, and its co-founder will tell us what challenges are top of mind for small and medium-sized businesses as the overall outlook and optimism does improve. Stay with us.
Orbit is a space logistic company. Actually, we have been the first space logistic company in the world, a pioneer. What does it mean? Space logistics for us means taking care of customer assets in space, so satellites.
But what you're describing, it can't be easy. So talk to me more about how you go about optimizing in-orbit services while also reducing costs for your clients.
You can consider the launch vehicle, the rocket, as a bus, leaving each passenger at the terminus. Our satellite, our orbital transfer vehicle, that's the technical name, is released at the terminus together with other passenger. But our satellite has on board third-party passengers, small satellites on behalf of other companies. And if the rocket is a bus, we are Uber, taking each passenger to their respective home, which is the target orbit. They could do that on their own, which with traditional methods takes 6 to 10 months, thus wasting 1/3 on 1/4 of their operational life. We can do that in much lower time. So the result for the end user is getting to revenues earlier and extending the operational life of their asset.
There has been increasing demand when it comes to the utilization of space-based technologies. Talk to me about how D-Orbit is positioning itself from a business standpoint to keep up with the growing demand.
Besides the traditional standard services, we now see a big demand for something new, which is cloud computing in orbit. The quick, immediate need of
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange. Now, small businesses are facing major shifts from new policies to tight labor markets. To help navigate through it all, we're joined now by Elizabeth Gore. She is the co-founder and president of Hello Alice, a platform supporting over 1.5 million small businesses. Elizabeth, it's great to have you in studio this morning.
Howdy, thanks for having me.
It's great to have you. So let's just dive into this conversation. Obviously, new trade tariffs are at the forefront of conversations around the world, especially especially here on Wall Street. So let's talk about how it's going to directly impact small businesses, especially those businesses that rely so heavily on international imports.
Yeah, this is going to be a short-term and a long-term answer. So in the short term, the costs of goods sold are going to go up. And so if you look at your coffee shop, your local grocer, or anyone who literally has any physical product, their costs are going to go up. So they're either going to have to absorb those or pass those along to you as the consumer. So it's going to be tough for a while. Now, long term, maybe it'll bring supply chain and supplier diversity contracts and bring inshore opportunities for small businesses, but we're going to have to really support them in the short term.
And with tax reform potentially lowering corporate tax rates, what impact do you see this having on those small businesses and corporations?
All of us as business owners, we love lower taxes.
Yes.
So, maybe that'll level this out, the tariffs and the taxes, but I'd rather have no tariffs and lower taxes. So it's we have positive and negative effects on all of this.
What do you think the implications will be as we're seeing immigration policies tighten? How can small businesses who depend on immigrant labor to navigate through these uncertainties?
Well, anyone who has high labor costs, so agriculture, everyone doesn't think about agriculture actually being the largest small business industry. And so getting labor, qualified labor, and then also the constant supply of labor, if that's going to go down, again, that's going to raise costs and shorten the ability to bring out supplies quickly.
Now, I do want to talk to you. The revocation of supplier diversity rules could also heavily impact the diversity of small businesses. Talk to me about the advice that you have for these small business owners and how to navigate through, this shifting landscape.
I'm a big fan of supplier diversity contracts. So if you look at companies like Dell Technologies, they spend billions every year on supplier diversity contracts. Think about everything from their packaging to food services. So I'm really encouraging companies to keep that going. And then additionally for small business owners to seek out those contracts. The largest supplier diversity contractors is actually the U.S. government.
Yeah.
And so really seeking out women, people of color, U.S. veterans, for those contracts is critical to our economy.
And speaking of shifting landscapes, obviously social media, this is constantly evolving, shifting right now in the current environment that we are in, but a lot of small businesses heavily rely on social media for advertising and marketing. Talk to me about how this shift might impact the way these small businesses market themselves.
I tell you, no one felt the brunt of TikTok shutting down, even if it was just for 12 hours, as much as small business. So TikTok now is one of the top places where small business owners actually promote and sell their products. So I understand the importance of national security and so on, but we really have to think through the impact of platforms that are selling small business products at a reasonable rate. So if you look at an Instagram, if you look at a TikTok, those are critical for the products that you love and that you purchase to be on those platforms, to sell on those platforms. So if there's a shift in those platforms, we need to think of Main Street, which we don't always make that connection. We think of high growth and influencers, but small business products now are sold on those platforms. So we really have to focus on that.
Now let's talk about AI investment. Obviously AI technology, they are also at forefronts of conversations around the world, but talk to me about how it's a game changer for small businesses and how they can really utilize AI to level up their marketing capabilities, but also just their business strategies in general.
So I'm a huge fan of AI. I really think it's going to democratize access for small businesses. I think it's going to lower the cost of starting a small business. I'm super excited that the administration put out a significant commitment around AI. I want to make sure part of that commitment goes to small business infrastructure. Just think about how hard it was to write your first business plan, to do all the things that normally you would pay others to do, and now AI is helping make that faster. So in Hello Alice, we're making a significant investment in AI tools for the small business community. It's a game changer.
Now we also have about 30 seconds left, but I do want to know what your advice is for small business owners to retain top talent.
Ooh, retaining top talent.
Try saying that 10 times fast.
I haven't had enough coffee yet, but I will say talent is critical to small business owners. Get in your community, focus on giving back to your community, and your community will come to you, whether it's customers, talent, hiring, and so on.
Amazing. Elizabeth Gore, co-founder and president of Hello Alice. Thank you for joining us in studio.
Thanks for having me.
Absolutely. Now, when we come back, one dating platform is offering a $1 million experience when it comes to matchmaking. So stick around for those details.
So you work with many organizations undergoing digital transformation. What role does observability play, and where does Dynatrace fit in?
When you're going through a digital transformation, most likely you're going to change a lot of your digital estates. You're building new applications, you're connecting maybe a new mobile app or a new service to your backend systems, connected to AI systems. So the first thing you need to do, where observability helps you, is really understand your entire IT estate. What are you running? Which components or which applications are talking to others, what's working, what's not working, because you're obviously going through this change, you're going to iterate over this environment and keep evolving it. That's one role that observability is playing. And once those services are then live and users are using it, observability helps you to optimize the user experience. I think just 2 days ago, when it was the British Airways outage, how do you feel at an airport if the service is not great? So observability does both. It actually helps you to understand how your system is working and how the individual pieces play together. And it also helps you to understand how users feel about your service, whether it's working for them. And then finally, if something goes wrong, and every now and then obviously something does actually go wrong, it helps you to find the issue quite quickly and helps you to also to resolve the root cause, or what the actual problem might be. Because as you can imagine, in complex landscapes, there's thousands, even millions of components. And observability and Dynatrace also helps you to pinpoint exactly where the problem is.
Now, Dynatrace has been working with AI for more than a decade. As the discussion regarding the cost of generative AI investments and ROI heats up, tell me, how is Dynatrace helping organizations to get the most value out of AI?
So we have a dedicated solution that we call AI observability. So we just talked about observability. Now we're extending it just to the realm of AI, so helping understand how much.
Good morning and welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, as stocks are pretty muted at the open, we do see the price of Bitcoin climbing over the past 24 hours to about $102,000 apiece. Some experts believe it could double this year. In fact, those calls continue to increase on our show based on what we heard at the market open from my guests then, and of course from Skybridge founder Anthony Scaramucci yesterday, a $200,000 price target on Bitcoin. Well, for more on what is ahead for the cryptocurrency and how you can invest in Bitcoin for the long term, joining me now is Chris Klein. He's a co-founder and COO of Bitcoin IRA, helping people get invested in crypto for retirement. Chris, welcome.
Hey, thanks for having me. It's good to see you.
Yeah, it's great to have you, especially here in person. And as we watch the twists and turns of this market, it has steadily pretty much climbed higher. Bitcoin at these levels, how does that look to you?
Oh, it's just a great time to be in cryptocurrency, especially after the last 4 years. I've been at this intersection of retirement and cryptocurrency for almost a decade. And in fact, I didn't have any gray hairs a decade ago, so crypto can do that to you. Just an exciting time. For once, we were kind of battered, beaten, and left behind for a while. And now we're back at center stage, and I think we're going to really just drive forward. And Scaramucci's 200,000, he's not crazy. And there's a lot of other folks calling for numbers of that level. So it's just, the sun is shining on the street corner.
And how does that factor into people's retirement planning? How does your company come in to assist with that?
Well, we make it possible where you can open, fund, and then trade up to 80 different cryptocurrencies. We just launched about 5 or 6 more today. And it makes it a turnkey ability for folks that are looking at crypto. And you think about the potential gains just since we last saw each other in November in a tax-deferred, tax-free setting with Roth and traditional IRAs.
How does the new administration, effective as of about a week and a half ago at this point, Chris, change the game time for cryptocurrency?
It hasn't changed the fundamentals of what we're here for. We believe in a change in monetary policy. But for the first time, I don't know if you knew this, but in the first time in 100 years, an executive order came out that was in favor of individual sovereignty in this country. So if you go back to FDR 100 years ago with the Gold Confiscation Act, and then you fast forward to Nixon in the 70s with the taking us off the gold standard, this is the first time where there's been an executive order from the White House that is helping average day Americans have an opportunity to diversify their monetary policy on their personal household balance sheet, which is just what we're going to do as a country with the reserve ahead.
So as we've seen the price of Bitcoin climb with calls to double this year, how have you seen institutional interest change?
Well, now that you have, one's kind of built in for the passive money. So with QQQ being listed in the NASDAQ 100, or sorry, with MicroStrategy being listed in the QQQ, now passive pensions and those types are actually almost active participants in the Bitcoin space, because any investment going to MicroStrategy, Saylor's told us what he's going to do. He's going to buy more Bitcoin. So you're actively involved in the Bitcoin trade. I think what you're going to see with this regulatory clarity and clairvoyance is now the guardrails are there, and you're going to see a lot more institutional money that was a little hesitant 4 years ago start coming into this space.
And what would be the mechanism in terms of how institutions would tap into this space?
So traditionally, like obviously IBIT and the ETFs came out, and that was a big push early last year. But now that SAB 121 has been rescinded and replaced with 122, there's actually an ability for them to custody assets without having to put a liability on the other side or an obligation on the other side to hedge it. So it's an exciting time, opening up gateways of potential for institutions. And then obviously I'm at the crossroads of retail investors. I work with average Americans every day that want to protect a part of their retirement account with Bitcoin. And they're just thrilled, because now they know that there'll be more people to the party. And let's never forget, there's only 21 million Bitcoin that'll ever exist, and 19.5 million of them are already accounted for.
So I do want to ask you, Chris, in terms of what you see for the outlook this year. Is it smooth sailing to 200,000, or could we see choppiness? Because many markets guests on our show have said that they do expect choppiness in equities this year.
Yeah, I think you're going to have volatility, not just in equities, but in definitely the crypto market. And that's Bitcoin, and then down into Ethereum and the smaller tokens as well. We're going to do price discovery. We're going to be in new zones, and that's always going to cause volatility. It actually, when Bitcoin gets boring is when it gets the most exciting to me, because there's usually a spring coming. And February, traditionally after a presidential inauguration, is a very exciting time. I would expect to see somewhere in double-digit gains in the next 30 to 45 days.
Chris Klein, co-founder and COO of Bitcoin IRA, joining us in studio. Chris, thank you.
Thanks for having me.
All right, so while the price of Bitcoin is currently just at about $100,000 a token, one company is offering a $1 million experience when it comes to love. We got to hit on that as well. And for that story, I wanted to send things over to my colleague, Trinity Chavez. Trinity?
Hey, Kristen, that's right. So today we're exploring a game-changing approach to modern matchmaking. And my next guest, Adam Cohen-Zalati, he is the CEO of 3 Day Rule. He is here to talk more about the $1 million matchmaking experience, a one-of-a-kind service offering personalized white glove support to help clients find love. Good morning.
How are you? How you doing?
Hey, Adam. Thanks for joining us on the show this morning. Let's just start by talking about what inspired you to create the $1 million matchmaking experience, and what sets it apart from other services that are currently out there.
Yeah, well, matchmaking has a between 70 and 80% success rate. So when you compare that to a dating app, which is about 9%, I wish the whole world had matchmaking at their fingertips. But really what sets this package apart is a few things. One, it's a 12-month intensive program to help singles get ready for love, find love, and maintain healthy relationships. It's available for 3 singles across the country. And also you get an exclusive team of 3, a matchmaker, a recruiter, and a date coach to help you do all the things you need to do to get ready for love, find love, and maintain healthy relationships.
And with many singles frustrated by dating apps, how does 3 Day Rule's personal approach solve those pain points and issues they might experience?
Yeah, so 3 Day Rule does take a very personalized approach. I think when someone is representing you in the dating landscape, interviewing people for you, going on all those first dates for you, making sure that when you get to your first date with your actual date, that things go well. They understand your personality, they understand your X factor, and I think that is really the differentiator when it comes to dating apps. On a dating app, it's the wild, wild west out there. You have to fend for yourself, you have to hunt for yourself, and matchmaking is significantly better. And 3-Day Rule is one of the most formidable matchmaking companies in the country, been around for about 15 years.
And why do you think that only about 1% of singles actually try matchmaking services despite the high interest?
I think that most singles don't realize that matchmaking services can be accessible to pretty much anyone at any income level. So for a fact, at 3-Day Rule, you can go right now to 3dayrule.com and you can sign up to our network for free. Or if you'd like, you can become a paid client as well. But when you're part of our network, you're part of our database of eligible singles, and therefore you're matchable across the country as well. So I think that while you might be on those dating apps because you want to increase your chances for success, also signing up to 3-Day Rule's database gives you an edge above everyone else.
And how does a comprehensive service like vetting, coaching, and custom rings really ensure a lasting love for clients?
You know what? Love is challenging, right? Finding the right person can be hard. And I do think that the coaching element is truly key. We find that when our clients are coached ahead of dating, listen to this, when our clients are coached ahead of dating, there's a 20 to 30% increase of a chance for success. So with this $1 million package, not only is the client getting all those services, the coaching, the getting ready for love, the understanding who you are, the understanding how to date better, the dating skills, our client gets that, but also every single date candidate gets that as well. So the chance for success in this program, especially because it's 1 year and it's an intensive program, is extraordinarily high. So again, everyone who's out there, they should definitely go to 3-Day Rule, sign up for the database, and also if they're interested, find out more about the $1 million matchmaking package. It's truly unprecedented in the industry, never been done before.
And we have about 60 seconds left, but I do want to get your take on what kind of client is ideal for this exclusive $1 million service and why?
You know what? Someone who's really willing to prioritize love, someone who is very busy and maybe they're an executive, could be in the US, could be internationally, and hasn't really found the one. Maybe doesn't understand who the right person is for them. Someone who is ready to give to themselves, give themselves to someone else, and someone who's really open to the experience. So not only are we only having 3 of these packages available, but we're going to be highly selective of who we allow to be our client for this package, because we want to make sure truly the person is dedicated to the experience, they're ready for love, they're coachable, and they're open to hearing ways of improving themselves or someone else. And I think that it is a very challenging environment right now to find the one. There's so many dating apps, there's so many services out there.
Yeah.
This is something that actually works. So if you're ready, if you're looking for love, this could be it.
I'm interested to see if maybe, it gets busier for you around Valentine's Day, as it's, just about 2 weeks away.
Yes, January, February, and March is dating, dieting, and wealth management season. So we are in the season of love. We could not be more excited to announce this package and also to just share the world more about matchmaking and let everyone know that it is a real alternative to dating apps. And if you're looking for love, it actually works.
Well, thank you so much again, Adam Cohen-Azalati, CEO of the 3-Day Rule. Now, we're just about to wrap the show, but I do want to bring in my colleague, Kristen Scholler, as we sign off here. I have to say, Adam hit on a lot of key points there, Kristen. I know a lot of people are now turning to dating apps these days, especially, as the new year kicks off.
Dating, dieting, and wealth management. That's a good way to kick off a brand new year if you are in the market for love and other things. But I think a good way to manifest, of course, the feeling of love heading into Valentine's Day. For Trinity Chavez, Kristen Scholler, our entire NYSE TV team, thank you as always for watching. We'll see you tomorrow.
for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.